$438 billion in Q1, 12 deals over $10 billion. The mega deal is officially back.
Oh, come on. When Intel drops $14.2 billion just to buy back a stake in its own fab, that isn't a healthy market. That's just expensive regret.
It's strategic unwinding. You just hate hardware. But wait until we get to Estée Lauder trying to buy Puig with paper.
Now that's a valuation I need to sniff test. Run the numbers. The rundown.
I just don't see the typical Uber user shelling out for a chauffeur. Uber buying Black Lane feels like putting a tuxedo over a t-shirt.
You're missing the point. Uber wants premium margins. They're tired of just being the standard airport run.
We'll see what it does to their burn rate.
Well, tech and life sciences are keeping the lights on regardless. Cooley just noted those two sectors are absolutely anchoring the transaction volume.
Case in point, Cyclerion Therapeutics and Korsana Biosciences. They agreed to an all-stock merger.
But did you catch the financing? It's supported by a $380 million private investment.
That's a hefty chunk of change to push an all-stock deal across the finish line.
Exactly. I guarantee those term sheets are buried in structural protections. You don't hand over $380 million in a biotech merger without massive liquidation preferences.
Spoken like a true skeptic. Over in the energy world, Apollo Funds is offloading Sapphire Gas Solutions to Antin Infrastructure Partners.
Antin is European, right? That tracks. European dealmakers are crushing it right now. They're outperforming non-dealmakers by a solid 6 percentage points on share price.
The big one.
155% jump. That's not a typo. $438 billion in a single quarter.
We haven't seen a Q1 like this in 5 years. And 12 of those transactions were $10 billion plus. The mega deal is officially off life support. I actually got a text from an old managing director buddy this morning that just said, "We are so back."
I'm sure he's already picking out a new boat, but look at what's actually driving this volume. Cooley put out a note saying tech and life sciences are anchoring the flow, which makes sense. But the actual deal structures are getting incredibly weird.
You're talking about the Intel buyback.
Exactly. $14.2 billion to buy back a 49% stake in their own island fab joint venture.
I love this deal. It's a massive strategic flex. Intel is looking at the AI hardware landscape, looking at TSMC, and saying we need absolute control over our European manufacturing capacity.
A flex? Nate, come on. They're buying back a stake they literally just partnered off to raise capital. It's capital allocation whiplash. You don't sell half your house to pay off your credit cards, buy it back 2 years later at a massive premium, and call it a strategic masterclass.
Okay, first of all, great analogy. But second, the world changed. When they set up that JV, the cost of capital was totally different and their cash flow was squeezed. Now they need unencumbered assets to compete.
I read the press release 3 times looking for the actual premium they paid over the initial valuation. Funny how that number was completely absent from the main text. I had to go into the SEC filings and reverse engineer the $14.2 billion against the original deal terms. They overpaid for their own concrete.
Spoken like a true skeptic. But look at the macro picture here. European dealmakers are currently outperforming non-dealmakers by 6 percentage points on share price. Intel is tapping into a market that's actually rewarding aggression right now.
Rewarding aggression or just ignoring bad history? They treat these multi-billion-dollar fabs like boomerangs.
Sometimes you throw a boomerang and it comes back and hits you in the face. Sometimes you catch it and you look like an absolute legend.
I can't believe you just defended a $14 billion transaction with a boomerang metaphor. You sound exactly like a banker justifying a fee.
Hey, speaking of fees, the banks get to double dip here. They got paid to set up the joint venture, and now they're getting paid to unwind it. It's a beautiful business model.
That's the real reason your MD friend is texting you.
Oh, absolutely. The advisory fees on these Q1 mega deals are going to fund a lot of Hampton's renovations this summer.
Well, speaking of expensive things that smell nice, I'm looking at these rumors about Estée Lauder. Voices.
I am looking at this market note from the lawyers over at Cooley, and they are claiming U.S. tech and life sciences are the absolute anchor of this record Q1 deal flow.
I read that too. But then you look at the actual share price data, and European dealmakers are quietly crushing everyone. They are outperforming non-deal-making companies by 6 full percentage points right now.
6 points is a massive premium.
It is. But I am not buying the narrative that Europe suddenly figured out a magic M&A formula. Look at Lupin completing its buyout of VISUfarma. That is a global pharma major scooping up a European asset. The volume is there, sure. But are European buyers actually smarter right now or just cheaper?
Oh, come on. You are being completely unfair to the continent. European corporates are being highly disciplined. They are not just throwing around $10 billion checks for the press release.
Tell that to whoever is advising on this rumored Estée, Lauder, and Puig combination. A massive, primarily stock-based luxury beauty merger that has messy European mega deal written all over it.
First of all, Puig is a great company. Second, a stock deal in luxury beauty right now is actually a brilliant hedge. You preserve cash while the consumer market is volatile. It is classic banker defense strategy.
Spoken like a true recovering banker. You just want the advisory fee on a giant stock swap.
Guilty as charged. But Cooley is right about life sciences keeping the lights on. Look at Cyclerion and Korsana, an all-stock merger backed by a $380 million private investment.
That is the detail that actually caught my eye. Private money having to step in to backstop a biotech merger. That tells me public equity markets are still terrified of regulatory risk.
Exactly, which is probably why Gilead just kicked the can down the road on their ARCLX tender offer. They extended the expiration date again.
The classic waiting game, just hoping the antitrust weather changes.
Speaking of regulatory weather, tomorrow is going to be an absolute storm. Are we ready to talk about the Paramount and Warner Brothers fallout? Spill the tea. Okay, I need to talk about the Estée Lauder and Puig rumors because the whisper numbers on this are getting ridiculous.
A primarily stock-based combination. That's what my sources are saying. Which is wild when you think about it.
Why? It makes perfect sense. Estée needs a shot of adrenaline, and Puig has the trendy niche fragrance brands. It's a match made in heaven.
Nate, Puig is a family-controlled company. You really think they want to trade their pristine equity for Estée Lauder paper right now? Have you looked at Estée's chart lately?
You're looking at this like a spreadsheet. Look at the momentum. European dealmakers are crushing it. They're outperforming non-acquirers by 6 full percentage points on share price. The Puig family takes the Estée paper, gets a massive premium, and suddenly they're the kings of global beauty.
I completely disagree. I think it's a defensive leak. Estée wants the market to think they're playing offense. A primarily stock deal just screams that nobody wants to finance a cash portion.
Spoken like a true cynic.
Spoken like someone who actually reads the risk factors. Speaking of deals dragging out, Gilead is playing the waiting game again.
The Arcellx tender offer. Yeah, they just pushed the expiration date back.
Classic regulatory purgatory. They're trying so hard to get this across the finish line, but the lawyers are just chewing up the clock.
Which is exactly why I'm fascinated by what is actually closing right now. Because while Gilead is stuck in the mud, Q1 just shattered records. 12 deals over $10 billion.
Including that massive Intel buyback in Ireland.
Exactly, $14.2 billion just to buy back a 49% stake in their own fab joint venture. We need to unpack those numbers next because the structure on that one is a banker's dream. Tomorrow's radar. I'm clearing my entire morning tomorrow for the Paramount Warner Brothers filings. The regulatory fallout alone is going to be an absolute bloodbath.
You're way too excited about lawyers billing $2,000 an hour. I'm actually watching Gilead. They just extended the tender offer for Arcellx again.
Oh, come on. That's just standard regulatory delay. The real drama is the Estée Lauder and Puig whispers. A massive all-stock luxury beauty combination. The valuation math on that is going to be wild.
Massive is doing a lot of heavy lifting there. And an all-stock deal when European dealmakers are outperforming non-dealmakers by 6% right now, Puig is going to want a serious premium to take Lauder paper.
Spoken like a true cynic, I think it's a brilliant currency play.
We'll see who's right when the S4 drops. Speaking of brilliant currency plays, wait until you see the absolute mess of a capital structure Apollo just handed Antin.